Good morning and thanks so much for tuning in. You're watching Trade Talk on BQ Prime. My name is Alex Matthew and with me is Hiral. Morning, Hiral.
Good morning, Alex.
Well, it's going to be an earnings-focused show to say the least, and possibly a trading session that is also going to be dependent on earnings, because we've got, 7 Nifty 50 companies to talk about, 3 reviews and 3 or 4 previews.
Absolutely. Yeah. But clearly, if you see in terms of yesterday's session as well, Alex, the volatility remains. However, probably, what analysts are of the opinion is that it's forming the bed for an upside from here on. Now, whether that will happen or not is anyone's guess. It is interesting to see how October has been one of the worst months in the year. And if you, from a Bank Nifty perspective as well, it's the worst performance for Bank Nifty in the month of October in the last 11 years, right? So there is that pressure that you can see in terms of the financials, which is building in. And we've actually hit the pause button after 2 sessions of gains.
Certainly. And if you zoom out, Hiral, this morning you're hearing, or rather you're reading headlines that talk about the possible escalation of the war in the Gaza region. Yemen Houthis have announced or declared war against Israel, and that really is the crux of the situation. I was speaking to a bunch of people at a Morningstar event yesterday, a lot of veteran investors, and they say that they can't predict any of these things right now, and they'll have to move with the headlines that come out. And to a certain extent, one of the biggest watching points or the biggest worries is an escalation beyond the borders of Gaza.
Absolutely. And that the geopolitical tension is what is actually keeping investors nervous as well in terms of Indian markets. Because from a sector perspective, if you see, yes, real estate was the top gainer, which was followed by media, but there was major pressure coming in terms of the auto pack. Bank Nifty, we've mentioned. Auto, yeah, you have the auto sales numbers that will start trickling in today. So last 2 sessions, there has been weakness that has come in on that sector as well. Very quickly, if you see, we have the Fed policy outcome tonight as well. So that is something that investors are watching out for. And you have investors who will be watching out for economic data, wherein you have the European core CPI, the US consumer confidence, you have India, US and UK PMI, as well as the non-farm payroll, the employment data, that will be out as well. So a lot of global economic data that does come in, plus, as you mentioned, the geopolitical tensions that do come in. So all of this is what is keeping investors absolutely pretty much on the tender hooks, and the FIs have been selling.
Certainly. And you pointed out the Eurozone CPI or inflation coming in at a 2-year low, which is pointing people in the direction that suggests that there might not be another rate hike in the Eurozone. But let's focus on the FNOQs for today. And Agam is joining in as usual to give you a setup at the start of trade. Morning, Agam. What are you looking at?
Good morning, Alex and Hiral. I am going to pick up on the point where Hiral left off, and this was about forming a base in our own markets. We have to remember that at this point in time, FIIs, as far as index futures are concerned, are still just about 13% long. Now, when you see that kind of a ratio, usually what happens is that you either see consolidation and a little bit of an up move, unless there is an expiry which is on its way, and which under those circumstances, of course, a lot of factors can change. But at the moment, it does seem like the markets from an FII standpoint, at least the index futures, are oversold. So, when it comes to futures, at the moment, we are seeing a 1% increase in open interest as far as Nifty futures go. And the Bank Nifty, of course, has seen a decline, but you really haven't seen too much change in open interest in general overall, which means that at the moment, traders are hesitant to take any large bets taking in as we move into trade over the next couple of days. For now, of course, the base is at around 19,000. This is for the weekly options expiry or for the Nifty on this coming Thursday. And on the higher end, where we're looking at a lot of activity around 19,200, 19,300. As far as the Bank Nifty is concerned, again, we're looking at a 1,000-point range. At the moment, we are keeping an eye on the 42,500 mark as a base. And on the higher end, it's the 43,500 mark, Alex. But, as both of you have mentioned, a lot is going to depend on fundamental triggers, economic triggers, going in over the next few months and the next few weeks, in fact. And that's exactly what's going to determine trade going forward.
Absolutely. And with this, how the Diwali is going to pan out is going to be interesting
Yeah.
to wait and watch, because there were a lot of expectations that probably we will be above those 20,000 to 20,500 kind of levels, at least during Diwali, and that will
Right.
sustain. But apparently does not seem to be the situation so far. So let's see what that looks like. But let's quickly move on to stock specific action and understand which are the companies that could impact the way Nifty moves. You have L&T that will be in focus as well, and this is mainly on the way the earnings have panned out. Clearly, the order inflow has spiked for the company, as well as the capital return has taken the ROE to almost 15%. The key is going to be also the foray into the fabulous semiconductor design. Let's understand from Vikas as to what's in store and what would this actually mean for an L&T from a stock perspective. Vikas, good morning. What are you picking up in terms of the earnings, and what are the key highlights?
Yeah, good morning, Hiral. Basically, as you already said, the earnings had been extremely good, as online or in fact better than what the analysts had estimated. So revenues have kind of increased by 19% to almost 51,000 crore, mostly on the back of better order execution. Order inflow has also kind of its highest in the L&T's history, to almost close to 80,000 crore, 89,000 crore, and international order has contributed almost 67% to that. So most of the order has come from Saudi Arabia and Middle East. And Mr. Shankar Raman yesterday had already told reporters in the con call that they do not expect much kind of disruption to their operations there in the Middle East, because most of the order is coming from Saudi Arabia and Gulf countries. So supply chain doesn't get affected from Israel as such, and also the quality of the orders that they have from there doesn't expect to be affected by the conflict. As far as revenue guidance is concerned, or the order guidance, they have maintained the order guidance as of now, and they have said that they have already for first half done better than what they had guided, and they will outperform even for the full year. But they haven't changed the guidance as of now, or they haven't given a value to it, how much it will overperform or outperform. So overall, in terms of order inflow and revenue guidance, the company is looking to be in a steady position for the full year.
All right, we'll have to watch what the stock reaction is going to be. Vikas, thanks so much for joining in and giving us those key highlights. Remember, it's a significant beat on the bottom line number, so you could see a big move on Larsen & Toubro. Keep that on your radar today. Let's also focus on Bharti Airtel, because this is a company that we've been tracking very closely, and the net profit number apparently missed estimates, but there's more to this than just that headline number. And Smriti is joining in to give you some perspective on that. Smriti, there was an exceptional item to talk about. There was also a miss.
Yes. Good morning, Alex. Good morning, Hiral. As you mentioned, yes, profit was the only number that missed estimate. Revenue and margin were in line as per consensus estimates. Now we have to understand that Airtel did post a healthy growth, and net profit was down. Net profit was up 38%, but it still missed estimate because of an exceptional item, which was on expected lines, a provision created after the Supreme Court ruling that variable license fee needs to be capitalized and it cannot be treated as a revenue expenditure henceforth. So let's look at the numbers first, and then I'll come to profit. Revenue fell about 1% to 37,000 crores. Operating profit flat at 19,114 crores. Margin at 52.7% versus 52.3% in the last quarter. And lastly, net profit rose 37% to 2,093 crores. Now, we have to understand that the additional tax provision that was created was about 226.3 crores. However, the interest on this is 1,350 crore, which was the exceptional item in the P&L that which is why the profit missed the estimate. In the last quarter as well, there was an exceptional item for a completely different reason. That was devaluation of Naira and its African subsidiary. So overall, good growth. ARPU number was at 203 versus 200 in the last quarter.
So that's significant. Yeah, they're moving towards their goal very, very slowly.
Quickly. So basically, the fight is now going to be between Jio as well as Bharti
Yes,
Airtel.
definitely.
And that's what we need to wait and watch. Thank you for getting us the details. But moving on to the consumption space, you did have, one Tata Consumer Products that reported numbers. We have CISA standing by to get us more in terms of how the numbers have panned out and what is the trend indicating. Because so far, what we've seen is that the rural demand, that is something which is a concerning area. However, the urban demand continues to stay strong. Let's understand from CISA what it looks like today. CISA, good morning. Over to you.
Good morning, Hiral. So Tata Consumer, achieved another strong quarter with an 11% increase in revenues, and this was mainly driven by the India business. Within the domestic business, if we look at the food portfolio, that grew 6% in terms of volume and 16% in terms of value. While the beverages, which is mainly tea, grew 3% in volume terms and 5% in value terms. Now, which looks like the worst seems to be behind for the India tea business, with the company gaining volume growth during the quarter, even though, it has seen a marginal decline in market share in September. TCPL's salt portfolio grew 8% on a high base of 27% during the previous quarter, that is Q2 FY23. However, there was a value market share loss of 44 basis points in salt. Now, the growth drivers seem to remain intact for Tata Consumer. Three of its businesses, that is Nourishco, Sampann, and Soulful, which is referred to as the growth businesses by the company, grew 39% and collectively accounted for 18% of the domestic business. The international business recorded 88% year-on-year growth in constant currency terms. The company said that, the branded tea and branded coffee categories in the international market continue to face demand headwinds. However, pricing actions and structural interventions have helped improve the margins. Even though the company has plowed some of them back in the advertising spends. Overall, if we look at the consolidated gross margin, that has expanded by 76 basis points over the previous year. EBITDA margin has also expanded by 148 basis points over the previous year to stand at 14.4%. Now, coming to the net profit, it did see a drop over the previous year, but we need to take into account the one-time expense of 15 crore relating to the business structuring and lower share of profits from the associates and joint venture. However, if we exclude this exceptional items, the net profit was up 24%, and that was above the consensus estimates.
All right, thanks so much for that, CISA. And we've also got Britannia to watch out for. So we will connect with CISA over the course of the day, or you can find the update on the website bqprime.com when the numbers do come out. So do stay tuned for that. Let's shift attention to the metal space, and we've got Tata Steel to watch out for. It will be posting its results for the second quarter, and Rishi's here to give you the key expectations. Rishi, I think we've spoken a lot about pricing, and we've spoken a lot about the international markets in the context of what's happening in China. How is the Q2 for Tata Steel?
So for Tata Steel, again, it's going to be the global scenario that's going to affect its profitability. Particularly, its Europe operations are going to be a drag on its overall profitability. So its performance is expected to be among the weakest among its peers. And based on Bloomberg estimates, its revenue is expected to decline by about 6%, and profits will probably drop by about 70% year-on-year. And again, it's going to be its Europe operations that are going to drag. This is because within Europe, the demand has been quite subdued for Tata Steel's products, and there's been a lower pricing environment as well. The impact will further be intensified because of lower volumes because of one of the ongoing relining operations in one of the blast furnaces in Netherlands. So all of this combined, Europe is going to be a drag. But if you look at India operations, they'll continue to remain robust on the back of lower coking coal prices that will partially be offset by lower realizations. Now, with regards to management commentary, the elephant in the room is going to be the restructuring cost. It recently signed a £1.25 billion deal with the UK government for a 3 million ton EAF, which will eventually replace the existing heavy end assets. Now, with the replacement, there's going to be restructuring of those assets as well as the restructuring of the balance sheet of Tata Steel. So with all these costs coming into play, it's going to be important to look out for, because the restructuring will probably remove some of the cash losses of the UK operations. Apart from that, the commentary with regards to prices and cost across geographies, both India and Europe, will be key to look out for Tata Steel.
This is going to be interesting, as well as the China impact in terms of metal prices is interesting to watch out for as well. Thank you, Rishi, for this. But you've been tracking the cement space pretty closely. Of Ambuja, that will be reporting numbers. ACC, the numbers were better than what the street was estimating. How is Ambuja looking like?
Ambuja also, I think, really good numbers is what is expected. In fact, the revenue is expected to rise by about 15%, with the profits rising by almost 5 times to 680 crores. Now, volume growth will probably be aided by a pre-election construction drive that is being undertaken across the country, weaker monsoons during the quarter, as well as capacity additions. In fact, Ambuja had acquired Sanghi Industries at an enterprise value of 5,000 crores, and this increased its capacity by 6 million tons to over 73 million tons, and it has a target of increasing its overall capacity to 140 million tons by 2028. So that is also something to look out for. Margins are expected to more than double to about 22%, and despite price hikes across India, realizations will remain flat. So the margins will be driven by lower fuel costs particularly. Now, that was the case for ACC as well, where the operating profits surged by 33 times on the back of a 32% decline in power and fuel costs. And it also reported an industry-leading growth of 17%. So Ambuja may follow suit as well. Again, here also management commentary with regards to prices and costs will be key to look out for, because prices are increasing again, but costs are also expected to increase in the upcoming quarters.
All right. Thanks so much, Rishi, for bringing us those updates. Let's shift gears once again and talk about the pharmaceutical space. And we've got Sun Pharma to look forward to. There were significant updates in the recent past, not necessarily with regard to the second quarter with the conflict, because we were talking about the implications there. But let's focus on the second quarter. We've got Varsha joining in to give you some perspective on the key numbers to watch out for today. Varsha, morning. What are you picking up?
Good morning. So Sun Pharma will be in focus today as company will come out with its second quarter numbers. Now, based on Bloomberg estimates, company's revenue is expected to rise 12.3% to 12,138 crore, but revenue is expected flat quarter on quarter. Now, the specialty business is expected to see a strong growth on the back of momentum in Illumia and Secure, which are the products in their specialty segments. The US generic business is likely to be impacted by regulatory issues at a Mohali facility. The Indian formulation business should grow in line with the industry. Now, EBITDA is expected to grow marginally, while EBITDA margin is expected at 26% versus 29% last year. Now, this is on the rise of employee costs and also increase in other expenses. Now, net profit is expected to rise 4%. Now, this is at a slower pace with comparison to revenue growth. This is driven by significant reduction in so this is because of higher R&D spend and consolidation of the Concert Pharma acquisition. Now, if you look at the sector outlook, if I may to say so, the Indian pharma market is expected to grow at 4 to 4.5% in Q2 FY24 versus 13% last year. Now, this is driven by reduction in volume growth and also slight dip in price growth.
Right. So I think overall, yes, the launch pipeline, etc., will be important as well. Thank you, Varsha, for getting us the details. Moving from the pharma pack, now you have the auto pack that continues to remain in focus. You have the auto sales numbers, but before that, Hero Motor reports its numbers today. Vinay is standing by to get us more as to what's in store, because clearly one of the aspects is that the festive season somewhere has shifted to the third quarter. So how is the second quarter expected to pan out for the two-wheeler major? Vinay, good morning. What are you expecting with regards to Hero Motor?
Good morning, Hiral. So the Hero MotoCorp's profit is likely to jump 33% in the September quarter, but it is going to be entirely driven by better pricing and cost-cutting measures. And due to these cost-cutting measures and better pricing, the margin may expand 200 basis points to 13.9% from 11.9% last year. So, but the sales, however, fell nearly 1% to 14.17 lakh units, as we know that there has been a slowdown in the sales of two-wheelers since the COVID struck India. So, and this impact is clearly visible on the revenue of the company, which is likely to rise just 2%. So when the company reports its numbers today, investors will be keen to know as to what is the company's strategy to battle this slowdown in the sales of two-wheelers, and what is the launch pipeline is looking like.
Certainly, and I think the answer to that question might just be premiumization and the selling of larger ticket motorcycles, whether or not they are successful in doing that is another question. But let's talk about the volume numbers or the dispatch numbers for the month gone by as well. We're at the start of the month, and so therefore over the course of today and tomorrow, when I will be seeing a lot of those numbers. The question is, are they really comparable year on year? Because there are a lot of one-offs this time, right? You had Shraddh, but you also had Navratri that got balanced out. So what can you tell us about the key expectations?
So before diving in, I just wanted to clarify the same thing that you said. The numbers are not really comparable because Shraddh period was there in the beginning of the month. And if we see last year, Diwali and Dussehra was both in October. So that gave a boost to the sales. And this time only Dussehra is there. Diwali has shifted to November. So any numbers that come out today should be seen with those factors in mind. And coming to the numbers, the wholesale sales show strong growth across segments except tractors. So, but if you go to the retail sales, the estimates show that there is growth in two-wheeler sales, but the passenger vehicles are looking a little bit sluggish. The commercial vehicle sales likely to grow due to the strong MHCV segment, and tractor sales are falling because the sharp mismatch of festive season is impacting the category severely. And the last year's numbers were great because of the festive season and Diwali coming in October. But this time, there is a little bit of demand slowing as well. And a higher base is going to impact the sales of tractors this month.
Absolutely, and that's what I think the stock prices are indicating, because the last two trading sessions you've seen the auto pack that has continued to remain under pressure. Thank you, Vinay, for getting us the details, but let's quickly move across to the mid-cap and the small-cap companies which have reported numbers post-market hours yesterday. Varsha is standing by with the top five that could be reacting today, whether it may be good, bad, ugly. Varsha, what do you have for us?
Yeah, so starting with Jindal Steel and Power. So the net profit rose for the second quarter, beating analyst estimates. Now, the company's profit increased 6.3 times to 1,390 crores. Now, that compares with 1,078 crore of analysts tracked by Bloomberg. Now, consolidated crude steel production grew 4.4%, while consolidated steel sales remained flat. The surge in profit was driven by reduced costs supported by strong volume, and the cost of material consumed declined 2.8%, while other expenses fell 15%. Share of value-added products for the company increased to 67% versus 63% in the last year. Now, then JSPL actually plans to spend 5,600 crores in fiscal 24 and 25 to fuel its expansion plans. Then we have KEI Industries, where revenue was up 21%, while EBITDA was up 27%. Now, the EPC sales improved by approx 25% year on year, and the domestic institutional wire and cable declines 1% year on year, and the domestic institutional EHV cable grew almost 4x year on year, and the pending order is approximately 3,363 crore. Then we have Birlasoft, where company has clocked growth that live up to analyst expectations in this quarter. The revenue for the IT services firm rose 4% in this quarter, while that compares with the 1,290 crore estimate by the analysts tracked by Bloomberg. In dollar terms, if you see, the company's top line rose 3% sequentially, and it was up 3.1% over the previous quarter in constant currency terms. Now, growth during the quarter was delivered by manufacturing and financial services business, as well as digital and cloud. Now, if you see, we all know what is happening with the IT industry. The deal are reducing, but if against this backdrop, Birlasoft clocked a total contract value of $271 million, with new deals bringing in $167 million and renewals the rest. That includes $100 million plus contract. So that's good for the company. Then we have Gravita, where revenue was up 23% and EBITDA was up 24%. And if you see, the proportion of value-added products increased to 48% in H1 FY24, which is very close to the vision of the company by 2027. And the company has started rubber and aluminium recycling. So companies into lead recycling, but they've started rubber and aluminium recycling, which is a high margin category. Then we have Navin Fluorine, where revenue was up 13% and EBITDA was up 5%. Now, company in the on-call highlighted that the operating performance was below due to order referrals in specialty chemicals and CDMO business, and company saw slower ramp up of R32 gas, which is a refrigerant gas. Then there was partial shutdown in HPP plant also, and revenue from HPP in quarter 3 will be better than quarter 2. and pricing pressure for refrigerant gases continues in current quarter. Now, demand and prices for R22 to revive in Jan 24 onwards. Also, management has identified some late stage opportunities in last 2 years to reduce the lumpiness in the CDMO products.
All right. Varsha, thanks so much for bringing us those updates. Those are clearly stocks that you want to watch out for in trade. According to me, though, from what we've heard so far, Larsen & Toubro seems to be the one that might just take the cake today. And there are quite a few stocks that will react sharply on the back of earnings. Of course, the overarching theme could possibly be a bit of cautiousness today. Not just in India, but in global markets as a whole, Hiral, ahead of that Fed decision, because not just the pause, but the expectation of what is to come beyond this, whether or not this is the last hike. So everyone talking about the fact that it could be a hawkish pause this time. But let's still focus on the stocks that you need to watch out for in trade today, beyond earnings, because that really has been the theme so far in today's episode. Let's go across to Saloni now for all the stocks in news. Morning, Saloni.
Good morning. So the first one that we need to watch out for is SBI Card. So SBI Card and Reliance Retail have come together to launch the co-branded Reliance SBI Card. This is a one-of-its-kind, lifestyle-focused credit card that offers a holistic and rewarding shopping experience to customers across segments with various spending needs. So this card has been launched in 2 variants, the normal Reliance SBI Card and Reliance SBI Card Prime. Then we have Inox Wind Energy. So the company raised rupees 800 crore through the sale of equity shares of Inox Wind on exchanges yesterday. So 3.84 crore shares were sold. That decreased the company's shareholding in Inox Wind from 50.2% to 38.43%. And with this, Inox Wind ceased to be a subsidiary of the company. The buyers included Smallcap World Fund that bought 2.28% stake, followed by Eastbridge Capital Master Fund that bought 1.46% stake, and ICICI Prudential Mutual Fund and BNP Paribas that bought 0.73% stake each. Then we have Lupin. So the company received the establishment inspection report from the US FDA for its Mandideep Unit 2 manufacturing facility. So the EIR was issued post the inspection of the facility that was conducted in August this year. The inspection closed with the facility receiving an inspection classification of no action needed. Then we have Ethos. The company's board approved fundraising via QIP, and they have set the floor price at 1,627.49 per share. So the company may offer a discount of up to 5% on the floor price. And lastly, we have GSW Energy. So Prashant Jain resigned as the joint MD and CEO of GSW Energy and will continue to serve in his current position until 31st Jan 2024. He became the CEO back in 2017, and under his assistance, the revenues of the company have grown by 25% over the last 6 years, while the net worth and profits have more than doubled.
CAGR or 25% CAGR?
Yeah.
Okay. All right. Thanks so much, Saloni, for bringing us those updates.
The QIP is going to be interesting to watch out for as well. And clearly, there could be some bit of action, Alex, in terms of broader markets today. And don't be surprised if the numbers beat expectations in terms of the auto sales numbers. We could see that uptick because 2 days we've seen some bit of profit booking that has come in. So there could be some buying that could be initiated as well.
Absolutely. And that brings us to the end of this particular episode of Trade Talk. There's lots to discuss over the course of the day, though. And you'll find all of the action right here on BQ Prime. So do stay tuned.